Hi everyone, I'm Ken, the inventor of the CTKS method. Each day I seek to give you an edge in the market using professional smart money rules and thinking, based on my more than 30 years experience in financial markets, to assist you to become more of a financial blessing to yourself and those you love. If you want to get the institutional edge, please subscribe and you'll find we have one of the best communities on YouTube. Let's run the numbers. Bitcoin is currently down 0.89% to 24,618. Ethereum is down 1.83% to 1672. We can see that the main markets were down in the past trading session. We know from the Masterclass's rule 225, Bitcoin cannot escape the stock market's gravity. We have a systematic structure of looking at the markets. It's important to have the foundations in first, to check the general broader market second, to pop back into the crypto market third, and actually understand where the attention is. And investor attention is always measured through price. And before we get ready to buy or sell, we must have a view of positive excellence. That creates the professional mindset, or else we'll get caught up and swept up in emotional reactions. One thing that we note is the 5-year and 10-year break-even inflation rates are still marching upwards, and there's currently a 24% probability of a 50 basis point increase in the federal funds rate at the next FOMC meeting. We can see that there have been pullbacks in the Nasdaq, the S&P 500, the Dow and the Russell. No stock market can escape the US market's gravity, so just be aware of this. And we can see market-wide, the 2-year, the 5-year, the 20-year, the 30-year, the 10-year, they're all coming up. One thing to note, it's not all bad news. The Flash Services PMI registered expansion for the first time in 7 months. This is incredibly good news, and we've seen since May 2021 that the Flash Services PMI, which is a forward-looking indicator of how the services side of the economic system is actually repairing or degrading, we can see it's starting to repair. And when we look at the forecast was much lower and the growth has been much higher. One thing that we looked at in yesterday's video was the VIX, the fear gauge of the market. It looked like the VIX was starting to turn around, and we saw quite a large increase in the fear gauge in the past trading session. When you get a spike in fear, you would actually expect a retracement. In episode 813, and also the chart is in LV28 now, I talked about predicting local highs and lows. We need to do this for the stock market because it filters through to the crypto market. So far, we're seeing a sell-off in junk bonds and high-yield corporate bonds. This is not particularly the sign that we're looking for. Also, inverse credit risk is at a pretty important point. If it starts to collapse down, we would expect negative pressure on the markets to continue. What we're looking for is for junk bonds to stage a rebound, high-yield corporate bonds to stage a rebound, and inverse credit risk, that white line, to go up instead of down. A lot of people are very bearish, very negative on forward guidance. This is explained in episode 812 and also very extensively in LV13 inside the Masterclass, and you'll get this live chart as well. We look at the markets like this because we want to gain some overall perspective of what the retail market thinks and what the charts are telling us. It's very important that we disconnect the emotional side of trading and investing. Rule 28 helps us to do that because opportunities do reset daily. For example, in the top 100, the greatest gainers today were Anchor, up nearly 33%, Conflux up about 15%, Bone, Clayton, 1 Inch, AGIX, STX, BNX, and CRO. The greatest losers in the top 100 in the past 24 hours, HT down a little over 10%, followed by Curve, Near, Sand, Mina, OKB, Engine, Aptos, and Matic. The markets tend to go a little negative when Jerome Powell speaks for the FOMC minutes, and they're coming up very, very soon. It was fascinating to see Bitcoin's price explode over the retail $25,000 level, and people came alive and they piled into the trade only to see it getting faded. And the problem is, when the FOMC minutes come out, Jerome Powell typically shakes the market, and we've seen the FOMC probability of a 50 basis point increase at currently 24%. That's nearly 25%. This is pointing to the fact that Jerome will probably in the minutes say that we need greater than expected rate increases, and that's why I believe the yields have been coming up. As professionals, we cover this depth of information because we need to know where the basic ship of price action is headed. Is it headed into choppy seas? If it is, we'll just batten down the hatches because we sail on all weather conditions. We are aware that the FOMC minutes just come out in a few hours, so the concept is if Jerome speaks and the markets react badly, and we've seen a little bit of weakness in the main markets and Bitcoin as well, we could actually make our way down to the 23,142 to the 23,226. And we've noted that there's absolutely an increase in the probability of a 50 basis point increase. We've got to keep our eyes on actually profiting from volatility, having buy orders around the 23,000 and 20,629 to 20,979 to get in and out, maybe making a target return of around 5%. Could be a very, very effective strategy. For example, if Jerome spooked the markets and you had buy levels around the 20,979 mark and price came down and then whipsawed back to this smart money sell level of around 23,142, you would make over 10% for that particular movement in price. So just be aware that there's a lot of money to be made when volatility enters the market. And institutional and smart money investors and traders know this because they're always looking for volatility. Often retail will go all in and more at one particular price, which is usually a market price. If you're buying at market, please stop doing it. No professional would ever buy on market price. They buy at limit. They'll actually set their orders below the current price because they know all this volatility is just baked in to price action. Price is always moving in a wave, going up, coming down, going up, coming down, going up, coming down. It's always there. But retail is always scared of missing out. You will not miss out. Price is negatively biased by its very own nature. And you can see there is short-term support coming through this level in confluence with the smart money buy level of 23,142 to 23,226. So this could be a good level. But in terms of risk management, actually going down deeper and lower is a very wise idea. The markets are quite overextended at this current time, and we really want to see a spike up in high yield corporate bonds and also junk bonds to see that the markets are starting to get a risk-on appetite. This is one dimension. What about if markets just go sideways? They can do so. We've been flirting with this retail $25,000 level. Retail always thinks in terms of round numbers. Professionals never ever think in terms of round numbers. This is one way that you differentiate retail from professional. You want to be on the professional side. The other side to actually note is that resistance is not at 25,000. It's at 25,403 and 25,943. How do we get these lines? How do we know where that resistance is? We mark up with the CTKS method. What does the CTKS method do? It actually analyzes all of price history, not just recent price history. But what if the markets actually positively react to Jerome and whatever other economic data is out there, and they just start to rally, you have to be prepared for all three cases. And that's quite tricky because retail only wants one direction. Professionals have three-dimensional thinking. So the first level of smart money sell resistance would be around the 25,403 mark. The second one would be 25,943. So just bear this in mind. You want this three-dimensional thinking. I'll just explain that a little more. To break out of the retail mindset, it's vitally important to understand that you control the trade or investment, but it's the market that controls the return. And your returns are always based on your active learning, your knowledge plus your courage. What do we look at here? What is this thing called the CTKS code? It's your daily three-dimensional risk management. What did the market do in the last 24 hours? It came down. What do we expect the market to do in the next 24 hours? We always consider the down case first, the neutral case second, and the up case third. And we just weighted with a specific percentage. If we think there's a probability that the markets will go down, say 70%, we put D70 in this second area. This tells us what we saw the markets do, and everybody's got different time zones. So what you will find is in some markets, people say it actually went up. Some markets it will go down, and some markets it will be flat. You need to be aware that people come in through all countries when it comes to crypto. The next thing we need to consider is what that could do to our portfolio. If it actually goes as anticipated, if it moves against us, what percentage of our portfolio will move down? What percentage will be unaffected? Unaffected could be just a very marginally traded, very stable crypto or stock. Or it could be just stable coins. And what about the inverters? What could actually go the other way? When the market comes down, there are some things that go up, and they're notoriously good at going up when the markets come down. And it's the same thing when the markets go up. Some cryptos will come down as well. The most important thing to actually work on to be a professional is your synchronization factor. A synchronization factor, and this is just a percent. This says 30% synchronized with the market. The markets exist as a reallocation device between the non-synchronized or the desynchronized to the synchronized. If you're desynchronized, just step back from the market, lower all your trading positions, scale down. Don't scale up when you're desynchronized. That's a recipe for disaster. How do you work on increasing your synchronization factor inside the market? It's simple. It's one word: systems. One of the best systems that you will ever get is to understand the market fundamentals, understand how to look across all markets and understand what those market statistics are actually saying. How to find the market's focus, understanding that opportunities reset daily and enhancing your pattern recognition. The system of being a professional inside the market is absolutely critical. If your emotions are guiding your buying and selling decisions, you're going to lose money, full stop. That's just the way of it. And then there's so many techniques to buy and sell. You just become like a master chef. You've got different ways, different ingredients, different ways that you can buy and sell. You just combine those for what works for your personality. You must tailor. Unfortunately, a lot of people in crypto ignore the main markets completely, and this is a very punishing thing to do, because if we see the shorts at the moment, they're coming in because the shorts think that Jerome Powell is going to place negative price momentum inside the markets by increasing yields. There's also geopolitical events that are unfolding at the current time. If this shakes the longs' confidence, and the longs' confidence is getting shaken out just a little bit, the longs will start to get liquidated. If there's cascading long liquidations, we would expect price to come down quite traumatically. And it also can bounce very, very traumatically to the upside. That's why we actually know that opportunities exist every day, just making sure that you're on the right side of the percentage and you'll do really, really well. When we look at 24-hour liquidations, they've been quite strong, 120.91 million across 50,873 positions. And when we look at total liquidations across the past 24 hours, we can see about 76% have been long. What about the past 12 hours? Say 82% long. What about the past 4 hours? Nearly 80% long. And what about the past hour? Ay caramba! Nearly 100% long. This is what we're talking about. The shorts are piling in. But you know why they're piling in. And you know how. If things will turn around. If we see, well, I'll show you. If we see yields start to curve down, that would be the first sign. That would mean that the VIX needs to start dropping. And these three factors are incredibly important. Junk bonds staging a rebound, high yield corporate bonds staging a rebound, and inverse credit risk coming up. Please keep your eye on the chart from LV28. I can't cover all of these charts every day, so I share them inside the masterclass. Rule 225, Bitcoin cannot escape the stock market's gravity. This is really important to have in your system. And there are so many rules that are also shared inside the masterclass, many of which require special foundation knowledge, so they're only shared in there. All financial markets are interdependent and intercorrelated. That means they depend on each other. Retail traders and investors think it's all about pulling the trigger. And it's not about just pulling the trigger. Before you do so, having an aim of positive excellence, breathing into the professional mindset is incredibly important. I believe positive excellence should be number one, but because so many people just don't get it, I had to make it number 4. Whatever system you adapt for trading and investing, please put positive excellence components into it. It's very, very important. And how do you do that? You actually do not focus on money. If your trading system is about making X dollars per day, you're going to be very, very disappointed. The markets will not conform to your will. We have to conform to the market's will. And because of that, we need to go slow to go fast. Sometimes it's kind of like just having a restaurant. Most restaurants make all their money in just a couple of days, Friday night and Saturday night. But they can stay open the majority of the week. Each one of these particular words has great significance and great meaning. Yesterday, we talked a little bit about purpose, and the community had some great things to share. Beardy shared a very, very beautiful comment. Purpose is what helps me to get out of bed in the morning. It keeps me going when things get difficult. People who lose sight of their purpose can get very ill or wither away and die. A lot of people make purpose about their work, getting up and going to work each day, well, at least 5 days or 6 days a week. Actually, work can never be your purpose. It's important to have a purpose outside your work. Oscar said something very good. Wouldn't it be something if everybody left school with a formulation of his or her purpose to be redefined, refined, changed and specified as life goes on? Of course. But having practice to getting to know oneself and expressing that to others while guided by benevolent teachers. Really beautiful, Oscar. It seems the school system actually prepares people for a work-based world, but in the future, and especially with AI, what will actually happen to the work-based system? It will probably disintegrate. Brett had some really great comments, and I'll just read one of them. The first one was, why do you bother doing things? Because it's important to do. And Brett said, personally, I love a freshly made bed. It feels so nice against my skin. I love Bitcoin going up and down. That's where I trade. These videos are more than just crypto technical trading. They are a gateway to a better, happier life. This is one of the best communities out there, either online or in the physical world. I like to do the best in my work, and it's not about other people, it's about me putting in excellence into everything I do. A lot of people say, why bother? And Brett says, well, why not? I'm here on this earth, I might as well give it my very best and see where this journey takes me. Besides, everybody knows it's all about being a financial blessing to myself and those I love and living a better life through positive excellence. This is a purpose. Thank you, Brad, and thank you everybody for your very insightful comments. Peter had an excellent comment on purpose. Purpose reminds me of the samurai ideal. Every waking moment is devoted to the perfection of whatever they choose to pursue. Excellent, Peter. J-Link gave purpose a different perspective. Purpose is the meaning of life. A life without purpose is meaningless and hollow. Purpose gives you the strength to move forward under pressures and difficulties. Positive purpose leads to a positive life, and negative purpose leads to suffering. Well done, J-Link. Absolutely excellent. And the meditative mind had some very good stuff to share as well. Having a purpose is what keeps us going every day. Purpose is something greater than ourselves that brings joy and happiness into the world. Without a purpose, people quickly wither and become lifeless. I've seen it happen many times to people who retire from the workforce without a purpose or a plan. And you're so true, meditative. People, when they retire, if they live for work, when they don't have work, they do wither and die. It's really, really scary. A very big thank you to everybody who shared through their commenting. We have one of the best communities on YouTube. If you've been a little bit shy and you haven't reached out, please reach out and just say hi. Our global community really cares about other people, and we care about bringing our best selves into life each and every day. Thank you for your very insightful words, Oscar. Thank you also to Yana for your very kind comment. This is a painting from my great-great-great-great-grandfather, Clarkson Stanfield, and he was best friends with Charles Dickens. It's really important that you build up your system, and that system must be right for you. But I would strongly urge you to make positive excellence the foundation of any system that you create. Systems that are built on the love of money just don't work. You've got to build your systems on the love of a process, and that process is what we go through each and every day. One of the courageous parts of any process is to do your CTKS code each and every day. You want to get as synchronized in with the market as humanly possible. We've spoken a lot this video about systems and how to think about them and how to actually go through different data points to give you a wider perspective on the market. Please let me know in the comments what systems have worked for you. To have a system, you have to have a repeatable set of behaviors. Please let me know in the comments what are the repeatable set of behaviors that you look at the market each and every day with. Sharing these steps only reinforces your power inside the market. Another part of the system is just to create better habits and to think from a positive perspective. If you're thinking negative about your trading and investing, you're going to create negative results. You can't have a positive life through negative thinking. All results come from the mind, so daily positive affirmations for abundance, financial success, and happiness are very, very important. They should be part of your system too. Have a great day or night ahead, my friends, and I look forward to catching up with you tomorrow. Bye for now.